people to join. Okay, we're officially live. Sad Boy Slim in the house. How you doing, brother? Hope all is well. Hope everything's good with you as well. Code to trade over here on the Discord. Just going to give it a few moments here for people on the socials to jump in. Today we got earnings for DocuSign and Hewlett Packard. Both of them report at 4:05 p.m. Eastern. So they're reporting at the same time. Yeah, you as well. Sad Boy Slim on Discord. Hope you had a good trading day as well. I opened up a new position today, so I'll share with everyone at the end of the stream. But yeah, let's get going here. So DocuSign's reporting and Hewlett Packard is reporting. Let's just kind of take a look at what the forecasts are, the estimates, if you will. So DocuSign reporting at 4:05 Eastern. Forecast EPS is 91 cents. Forecast revenue is 806 million. They're trading just below their anchored VWAP. Just a quick look at their annual chart here on Earnings Whispers. Hewlett Packard also reports at 4:05, like I said. Their forecast EPS is 58 cents. Revenue expected to be 9.96 billion. They're trading right at their anchored VWAP, right around, say probably around 23 bucks a share. So we got a few moments to burn here before the data actually comes out. Kind of look at some bigger time frames real quick. We're gonna look at their income statements and balance sheets first, since we got a little bit of time here. So DocuSign kind of sold off into the close. Candles are getting a little volatile right now. They had a trailing 12-month PE ratio of 53. We have to cross-check that with their competitors and peers in the industry to see if that's on the high side or low side. But EPS $1.33. And they do not pay a dividend. 199 million free float. Got DocuSign on the left here. Printing a kind of volatile candle right here. You can see it flickering. TradingView price showing the same thing, I would think. Let me go 1 minute chart here. Okay, so we got a few more minutes. We got about 3 more minutes. So let's take a look at their income statement. Just some of the things I like to check real quickly. But you can see they are a net profitable, positive net income company. This is the quarterly basis. Q2 of 2025, they made a ton of money. They average around 60 million to 80 million a quarter. Annual basis, you can see DocuSign had trouble in 2021, 2022, 2023. Negative net income during those years. But looks like they've had kind of a turnaround story here. Nice positive net income that they have now. Balance sheet, debt to asset only 50%. That's great. We just want that below 100%. And it's been trending down, so that's positive there. Cash and equivalents, they got almost $1 billion in cash and equivalents. Well, that was as of January. Let me go quarterly. 844 million as of July 31st in cash and equivalents. So that's pretty solid. Let's look at the bigger time frame charts on DocuSign. Got a few more minutes here before the data drops and we get the reaction. But looks like right around 75 bucks. That's kind of where it rejected from in October. Also rejected from there last month. Right around 75 bucks. If it can clear that, this thing's going to look pretty good. I'm just going to put this line here at 75. That's my resistance one on the bigger time frame. Raphael on YouTube, you got like 25% of your portfolio riding on HPE tonight. Oh, all right. just be careful putting too much of your portfolio into one position. I mean, if anything, for me, if I was going to have 25% of my portfolio in something, it would be one of the indexes, like or the ETFs that follow the indexes, something like that. But not hating on you. I'm rooting for you. HPE is going to drop their earnings data in about a minute, about 30 more seconds maybe. So I'm definitely rooting for you, my buddy Raphael on YouTube. There's some things you could have done going into the earnings. If you're going to hold a position like that, you could have, depending on how many shares you got, you could have maybe put a collar trade on it, basically selling covered calls and then using those funds, that credit to buy some naked puts, which would be your downside hedge. So you could cap your downside at whatever strike you pick on the naked put side. You kind of collar it just to get you through the earnings. If it's like a long-term position. But here we go. I'm going to go back intraday on DocuSign, make sure I'm not missing that reaction. Wow, look where it wicked up to, right? I'm going to go to Hewlett Packard here in a second from my buddy Raphael, but isn't that funny? That's the $75 level on the bigger time frame that we just plotted out before that candle wicked right up to the line. That's so funny. So folks, the levels on the bigger time frame, you can absolutely put a lot more weight on those. Okay, they're important levels, and let's see what DocuSign ends up doing here. Still kind of volatile. It's got a decent sized wick on the top here. It's also got a wick on the bottom. Nonetheless, it's positive. Close the regular session at, and Raphael, I promise I'm going to jump to Hewlett Packard here in a minute because I know you're anxious. I'm going to get all the data I can on that for you. But DocuSign closed the regular session at $71.14 a share, up like 3/4 of a point on the day. Sitting here in after hours, trading around a little under $74. These are 1 minute candles. So let me see. The data's got to be out. So I want to look real quick, see what the EPS and revenue was. Look at this red candle printing right now. Almost retrace that whole green one. So a little indecision going on right now on DocuSign. We'll see if we can figure out what's going on. So let me just refresh my other screen here. And let's take a look. All right, here we go. I'm going to go to their, again, this is just a nice little graphic here that I can show everyone from what the expectations were. So EPS 0.92, revenue 807.4 million. So that was the expected numbers. But let me get the numbers that were reported for everyone. It is now red in after hours after having an initial positive reaction. So that's interesting. Kind of did a little reverse Uno action there, which we see before. Okay, here we go. Now, from looking down at the data just real quickly, it doesn't look bad, but that's why we're going to have to dig deeper and see what's going on. But from a bird's eye view, they did beat EPS. And they did beat revenue. So DocuSign does have a double beat. The year-over-year, quarter-over-quarter numbers are also green as far as growth goes. So it's you ask yourself, well, this looks great. But, what's up with this big red candle? So I'll look more into it and find out what's going on. They might have messed with their guidance a little bit. Maybe they had more expenses than investors thought they would have. Things like that. So I'll definitely keep looking into it. I'm kind of thinking it's probably guidance related. So as soon as I find out more on that, I'll let everyone know. And let me try one other thing here. All right, just some data from Wolf Financial, one of our partner companies. So again, for DocuSign, revenue came in $818 million versus the $807 million estimate. EPS $1 was reported. That's the adjusted EPS, and the forecast was 91 cents on there. So double beat, and gross margin 79.2%. Billings 829.5 million, and free cash flow almost $250 million. Well, a little bit more than that, actually. So let me post a few things here. So people that are in the stream wanting to know what's up with DocuSign. I'll put it on the bottom of my screen so you can see the EPS and revenue. I'll put it in the Discord as well for my Discord peoples. And let me go back here to my other screen. DocuSign posted a clean beat on both revenue and adjusted EPS with strong margins and solid billings growth, fueling a robust quarter. So DocuSign's earnings don't look bad. There's also no buying going on either. So we'll have to wait and see what big money ends up doing with this thing. And I'll find out when their earnings web call is, because sometimes we get a secondary move when they do their web call. So we'll figure all that out. I'm going to jump over to Hewlett Packard real quick and see what's up with them. Let's take a look. Okay, so Hewlett Packard had an initial negative reaction. I mean, they did wick up here to like, what was it, 23.50 around there. That obviously wasn't the real move for now. So it did come down here to 21.70 around there. Let's see what their data was and if they beat or not. And we'll kind of go from there. It's, they closed the regular session at 22.90. Hewlett Packard is only down 55 cents a share. So Raphael on YouTube, it's not looking too bad. So hang in there. Like I said, I'm rooting for you. I don't know if that means anything to you, but it's not like they're getting crushed either. I mean, a little bit of a negative reaction. You also got to think they were up almost 3% today during the regular session. So, if you think about it, I mean, they're kind of trading in after hours where it was, it was the low a day from yesterday. So, I mean, I wouldn't look at it too negatively right now. Like I say, it's not like they're getting crushed right now. They're down a little bit, 68 cents a share. It's not terrible. Let's take a look and look at DocuSign making a new after hours low. So there's definitely something up with that, and I'm going to find out. But let's take a look at Hewlett Packard. So they did beat EPS. They missed revenue by a little bit. Still a solid revenue company. I mean, almost $10 billion in revenue, for the quarter. I mean, they got a ton of revenue. That's how they manage the revenue. That's what investors want to know, right? But yet their year over year and quarter over quarter numbers, there's definitely growth there. But they missed revenue, but they beat EPS. So, missing revenue there, they missed it by what? $300 million almost. They were projected 9.9 billion. They reported 9.6. So, investors probably aren't liking that they missed revenue by almost 300 million. So that probably has a bit to do with the negative reaction. But again, just from my experience, they're down some. Yes, I agree. They're down some in after hours, but they're not getting crushed either. And this is still a high revenue company here. Let's see what else I can find. So Hewlett Packard. Let's take a look. I'm gonna post the Hewlett Packard EPS and revenue data as well. They did have a positive net income of $175 million, and this is for Hewlett Packard. Their cash flow from operations was $2.5 billion. So that's pretty good. That's even though they missed revenue forecasts, they have some highlights here, which I think is helping the fact that they're not really selling off in a major way right now, because there's still a silver lining with this company. Let me post this. Yeah, Raphael, don't, my thoughts personally, I don't think it's a terrible reaction. Of course, it's a red one, but still a strong company. Let me post this real quick. This is Hewlett Packard's EPS and revenue. I'll post it on the Discord as well. All right. And let me take a look at a few other things real quick. Okay, so cash flow from operations, we already went over that. That was $2.5 billion. The outlook for EPS 2.25 to 2.45, and that's for the fiscal year adjusted EPS. In fiscal year for 2026, revenue growth reaffirmed 17 to 22%. So they are projecting 17 to 22% revenue growth in 2026. So that could be good. Definitely good for them. And for the Q1 of 2026, they're expecting $9 billion to $9.4 billion. So Hewlett Packard, posted a solid adjusted EPS beat despite missing the revenue, but it's supported by strong operating cash flow. That's what we were talking about from before. Their cash flow from operations is $2.5 billion. That's a pretty sizable amount. So I do think the earnings are supported by the very high operating cash flow and the confidence in their 2026 growth guidance. So ref, it's going to be fine. It's going to be fine. And maybe moving forward, for every 100 share lots, start cranking out covered calls, man. Each cycle of covered call, you're going to be reducing your cost basis. For each covered call contract, you'd reduce your cost basis on 100 shares. So if you got I don't know how many shares you got, but if you got 500 shares, sell 5 covered calls. And let's just take a look at what they're paying. The premium will be a little inflated because of earnings, so it'll get adjusted tomorrow. But I mean, we'll just look at the monthly cycle in January. And I don't know what your cost basis is, but if you were able to do 5 contracts, I mean, even this $25 strike here would be solid, because that's paying almost 3% on the strike price. The last sale was $71 a contract. So if you had 500 shares, you could have deployed 5 covered calls and collected $71 for each of them. That would have brought in $355 right there. You know what I'm saying? So, and let's just say, for example, I'm just going to pull a number out of the air, that your cost basis was $20 a share. When you deploy those covered calls at the 25 strike and you collect $71 a contract, that will reduce your cost basis on the shares from 20 minus the 0.71 you received on the contracts. Now your new cost basis is $19.29. And just think, after, I don't know, maybe 2 or 3 or even 4 cycles of covered calls, you could have your damn cost basis close to $15 or something, So you got to start kind of thinking about these kind of things. And I'm just speaking in general now for everyone listening. Anyone who has a position that they're holding, and maybe it's a long-term investment, you're obviously going to hold those through earnings catalyst if it's a long-term investment. But as you approach the earnings catalyst, right before the catalyst, you got to start thinking about protecting your position. Yes, I know selling a covered call will cap your upside, but there's still profit built into the trade, right? From the premium you're collecting on the covered call. Then there's profit that can be made from your technical cost basis up to the strike price of your covered call. And if you're really concerned about missing out on upside, you can take some of the premium on the covered call and use that premium to pay for a naked call. And that way you can continue to participate in the upside. So there's all kinds of creative things we can do. Also, another thing you can do, let's say you got Hewlett Packard, you've been holding it for a long time, and you're profitable. It's a position you've had for a while. There's nice profit on the table. Earnings catalyst is coming up, and you're like, how do I protect this profit? I don't want to lose this profit if they for some reason have a negative reaction to their quarterly earnings report. And you're like, well, I want to protect my downside, almost every penny, that profit I have on the table. I want to protect the bulk of that, right? So what you could do is what I was saying earlier about the collar trade is, say this $25 strike here, you could sold that covered call, and then take that credit and use that to buy a naked put. And then that'll cap your downside through intrinsic value just from the strike price of the naked put. And the beauty is it's not costing you anything because you're using the credit you receive on the covered call to pay for the put option. So that's what a collar trade is, right? More for conservative investors that just want to protect the position. They're not really too concerned about, you know, the upside because maybe they already have a decent amount of profit on the table and they just want to keep holding it long term. So then you just put a collar trade on it. Is there a risk of your shares getting called away on a collar trade? Yes, there is. So you got to keep that in mind. But, you know, if you've held the position for longer than a year, instead of paying short-term capital gains, now you're going to get the reduced long-term capital gain tax rate. So maybe it's not so bad in the end anyway. And if you did want to re-enter the trade, then you could maybe just wait on a pullback day and then maybe start the wheel on it. You know, start selling cash secured puts at a lower strike price from where the stock is currently trading at. That way, if you do get assigned, at least you're getting a discount on the stock from when you opened up the cash secured put. So your strike price will be out of the money and lower. Excuse me. Take a sip of water. Raphael asked about the Discord. Yeah, there's a link in the description. Should be a link for the free. Like it doesn't cost anything. So yeah, if you want to come hang out with us, we live trade every day, and live stream and show everyone. And when I do my streams, I'm actually have my Fidelity account pulled up and I'm showing everyone how I'm entering the tickets and exiting the tickets and stuff like that. And I'm really hands-on with the members and got over 100 people in my coaching group. There are a few other coaches in the Discord that also have over 100 people in their coaching groups. So we got a big family over here and we're very supportive of the members. We don't put up with any drama. You know, we're not some toxic Discord. Like, you know, we got really great staff over here. As soon as they see any toxicity or drama, it's literally shut down immediately. You know, my thing is you know, I like to treat this like a business, right? And as you should. You know, this is our hard, you know, for most people, it's our hard-earned money. We're trying to create some financial freedom here. You got to treat it like a business, you know. So that's my views on it, at least. And Raphael and just anyone else listening, hopefully that little spiel I just made about different ways to manage a position. There's so many creative things you can do with options, and it's a beautiful thing. And that's kind of what I teach in the Discord is different creative ways to use options. I do write a lot of contracts, so I'm on the selling side of the opening transaction most of the time. But I also buy long options further out for hedging and stuff like that. Sometimes I'll buy some options like 3-4 months out, and then I'll use those contracts as collateral to target weekly income, and then I'll sell weekly options while using my longer dated options as collateral, which basically reduces your buying power on a lot of these trades by like 80-90%. The buying power you would need on the weekly trades will be reduced because you're using longer dated options as collateral. You do need a margin account for that. You're not technically using margin as long as you have the settled cash to cover the width of the spread. But that's the kind of trading that I do. I've been trading for about 10 years now. I've been with the Discord on staff for about 4 years now. So I didn't just pop up over there. I've been there for a long time. And we have a lot of fun. But yeah, DocuSign initial, you know, the reaction was negative. It is coming back up a little bit. And Hewlett Packard, it tried to make an attempt to bottom out around 21.70. That's kind of where it's at right now, testing that after hours low. So it may go lower, but I want to look at a few other things. Let me see here. See if I can find any red flags. I mean, the main red flag is Hewlett Packard missed revenue forecast. So anyone investing in Hewlett Packard or trading Hewlett Packard, that's the main thing that I see is they missed revenue forecast. However, they did put out a pretty solid outlook for next year in Q1 of next year and in fiscal year 2026. They put out a good outlook. So I think that this may just be a short-term pullback on Hewlett Packard. Let me pull up TradingView. I want to look at their bigger time frames like the weekly and the daily. And yeah, I mean, pull up the bigger time frames. This is the weekly chart, so you can see this downward move here. That's when the indexes experienced the 20% correction that we had from February to April. Most stocks that were worth anything rallied after that, and there was no exception to Hewlett Packard. So, you know, you can tell that people wanted to buy this dip, you know, in April when that correction ended. So I don't think Hewlett Packard's a bad company at all. They make a ton of revenue. It's just a little unfortunate that they did miss the revenue forecast for today's earnings. They did miss that by like 300 million. So that's probably has the most to do with why they pulled back a little bit. But look, they're not really down a lot. I mean, they're trading here in the post market at 21.87. They closed the regular session at 22.90. I mean, they're only down $1 a share. It's not bad at all. So hang in there. And, you know, not financial advice, but if it was me that had a Hewlett Packard position, I'd already be rinse and repeating those covered calls. Bring in some income while you're waiting for the shares to appreciate. It's definitely a solid strategy, and you can create some weekly or monthly, sometimes bi-weekly income. I do like to stay on the monthly cycles. There's just a lot better open interest and liquidity and volume, if you will, on those options chains. So just a couple tips there for everybody. Let's limit. Okay, it's almost 4:30. Let's find out when they're going to do their earnings web call, because they posted some really pretty guidance. Like, it looks good. I'd like Hewlett Packard higher ups to talk a little more in depth about that guidance. So that's what I would want to hear from the earnings web call is what's up with Q1 next year, and then what are you projecting for 2026 as a whole? So let's find out when they're going to do the call. So it's almost 4:30. I'm going to take a guess. I bet they're going to do it around 5 p.m. Eastern. But let's take a look. I'm just going to go right to their investor relations page and get it straight from them. And let me just pull this over here. So this is the investor relations page. It is December 4th, and right here, right on the homepage. So this is the let me post this link too. So if anyone wants to listen to the web call, again, I'll find out the time here in a minute. I'm thinking it's 5 p.m. Sometimes they do them at 4:30, but we'll see. I'll put that link on the bottom of my screen and leave it up there. Give people time to screenshot that. Post it down here in the Discord as well for my Discord family. That's how you're going to get to Hewlett Packard's investor earnings web call. And I'm just going to click here where it says learn more. And right here, so let me see if we got a time. Okay, no time here, so let me just click the webcast link. It'll give me a time. Okay, 5 p.m. Eastern, so I was right. They'll have you fill out this little form. Don't worry, you're not going to get spammed. They're probably just, you know, trying to see how many people attend the web call and stuff like that for analytics. But starts at 5 p.m. Eastern, all right? And that's the link on the bottom of my screen, can get you right there. So now we know when their earnings web call is. It doesn't start for another 30 minutes. So anyone interested in that web call, you got a little bit of time to burn before it starts. And we know how to get there with the link. So 5 p.m. Eastern for Hewlett Packard. I want to find out when DocuSign is going to do theirs. That would be good to know, because I know there's probably some people in the stream. Got almost 800 people tuning in. Welcome, everybody. See some familiar names, too. What's up, y'all? Good to see you again. I've been doing these earnings streams every Tuesday, Wednesday, Thursday for like the past year. Futurix, I'm assuming you're talking about Hewlett Packard. Am I bullish for next quarter? Based on the guidance they put out, the guidance looks good. They're showing some good growth with their guidance for, you know, what's expected for next quarter and fiscal year 2026. So I'd have to say I'd be a Hewlett Packard bull, maybe, you know, going into Q1. Of course, I'd really want to hear what they have to say during the earnings web call so they can give me just more in-depth view on their guidance. But yeah, I'd say that, and it's you know, a sub $20 stock here, so more on the affordable side as far as writing contracts against your position. So, you know, compared to like $100,000, or I'm sorry, $100 stock where you're going to need a ton of capital to write a contract on that. But with Hewlett Packard, it's still priced relatively cheap, I think, here in the low 20s. So you can absolutely start selling contracts on that, no problem. Futurix on YouTube is saying, so yeah, I would say I'm leaning to the bullish side for Q1 on Hewlett Packard, and to answer your question there. And then selling weekly covered calls could be a good strategy until next earnings. Yeah, and that would be a good strategy to reduce your cost basis cycle after cycle leading up to that next earnings. Now, if you're concerned about your shares getting called away because you want to hold the shares, it's like a long-term holding for you, I would suggest maybe not going, and not financial advice, just what I would do if I was writing the contracts. If you want to keep your shares, maybe don't go higher than a 20 delta. Now there's still a chance your shares can get called, but it's going to be less of a chance if you're going, you know, close to the money or at the money, like a 40-50 delta. So maybe that helps a little bit. This is for Futurix on YouTube. If it's a position and you want to generate some income on the covered call side, but you want to keep the shares, maybe don't go past a 20 delta on the calls, and you probably be okay. Okay, you've been doing 25, 30 delta. Yeah, that's right around, you know, right around my comfort zone. I mean, if it's shares I absolutely want to keep and I want the best chance possible of keeping, I know it doesn't pay a ton of money, but I usually just do 10 or 15 delta on those. And again, it's not a ton of income, but at least it's something. And also, I want to, on the covered call side, I want to at least get 1% of the strike price, right? So if you're selling the let's say $25 covered call, I want to make at least $25 a contract on that. Just, you know, that would be my 1% rule. Of course, 2-3%, I would love that. But yeah, M Labs. Okay. So, oh yeah, I was entering Futurix, so I think we got through that. I hope I answered your question there, Futurix on YouTube. M Labs Trading, love the name. Yeah, so we were talking about the 25-30 delta, and then I told you kind of what I would do if I really wanted to keep the shares. If I was just rotating the wheel, just in general, just for targeting income and then profit on the shares when they get called away, I don't really mind my shares getting called away. I would just consider that one full wheel cycle, and then I'll go back and analyze, you know, my return on capital that I had to tie up for that. But you know, most of the stocks I wheel, they usually fully rotate in 3-4 months. Sometimes sooner, sometimes it's 5-6 months. So I am taxed at the short-term capital gain tax rate, but that's okay. I'm targeting income, and I also trade on an existing business I have over here in Florida. So I actually opened up a brokerage account using my LLC for an existing business that I've had for 14 years, and actually fund my brokerage account from my business checking account from that business. So it's kind of, you know, not financial advice or tax advice or at all, just what I'm doing. And I actually am able to roll all my profits on that particular trading account through my business tax return. And of course, I write a ton of stuff off through my business. So a lot of times, you know, I'm not really paying taxes on the profits on that particular account, but that's because it's being funded by my business, which is a brick and mortar business that I have over here in Florida. So just a couple tips and tricks. Again, not financial advice. All right. I'm just telling you some of the little creative things that I do to save money and stuff like that. But yeah, MLab says wheeling is boring, profitable. I love boring trading. Boring is good because I'll just let that weekly or monthly income trickle in. And then, you know, over the course of an annual year, it equates to, I mean, you can beat the S&P annual average return by 3x. I mean, that's usually what I target every year. I want to beat the S&P by 3x. So I'm looking for like a 30% return. I think it's not being greedy. Like I don't go out chasing high premium or anything. But you can make 3% a month on your money pretty easily on some fairly good stocks. So that's what I try and do. Some years I do better than 30%. I get 40, up there I have some really good years. But to be honest, as long as I can get a 20% return on my money every year, I'm usually pretty happy. And with my wheel trades, another layer that I add to it is I fund my account fresh in January, and then I wheel trade all year with a certain amount of capital that I designate for the wheel strategy, because I also trade spreads and a lot of other things that I do on other brokerage accounts. And I have different brokers. Each broker has its own purpose. So I have a broker, all I do is wheel on that broker. Then I have another broker, all I do is spread trades on that broker. Then I have another broker with a little bit of money in there, and that's my day trading money. And it's good for risk management to kind of separate your each maybe have 3 or 4 brokers. You can sign up for as many brokers as you want, but each broker have a purpose, and then that way which strategies might be underperforming in a particular quarter, which strategies are overperforming and doing great during that quarter. And then you can, reallocate money to different strategies that are doing better than others. And it's just good risk management. And it keeps you sane too, because imagine having a wheel trade going, and then I got a spread going on the same stock. And then you got to go through your position layout and figure out I know some brokers, you can kind of categorize things, but that's just what works for me. I like to keep things very simple, So anyways, I'll fund an account in January, and all the money I make throughout the year on the wheel strategy, if I can I try and get 30% on my money if I can. Then I take those profits at the end of the year. I'm getting ready to do it in a few weeks here, and I roll it into a real estate deal that cash flows me. I usually yield about 10% on my cash every year on my real estate deals, and those pay me monthly interest payments every month. I'm a private lender over here in Florida, so I loan my money out to real estate investors. We do 2-year balloon notes, and but it's great, on the lending side, because my money's protected by real estate, right? So that pays me monthly interest payments, and I usually yield about 10% on my cash. So if you put $50,000 into a real estate deal, I want that cash flowing every month, like $425 a month would be good. And then, once you get like up to, after a few years, you get up to 10 deals going. Now you're making $4,000 or $5,000 a month in true passive income. But that's what I like to do. I love trading. I love writing contracts. I love running the wheel strategy. I will wheel the same 4 stocks all year. And that's another thing. Some people are trying to trade like 20, 30 stocks. You're going to drive yourself crazy. Pick out a handful, maybe 3 to 5, and just get to know them. Get to really know those stocks, get to know the fundamentals, get to know what their catalysts are, get to know their financials. After a little bit of time, you start feeling the pulse of the price action, and you really get into a rhythm with the stock. So just pick out, like, not financial advice, just what I do, but pick out 3 to 5 and just roll with it for the year. And then at the end of the year, I'll take all that profit, and like I was saying, I just dump it into a real estate deal, because there's no screen time on those deals. But with the way I trade in the Discord and in my coaching group, there's also not a lot of screen time with the way I trade. We usually do most of our management on Fridays and Mondays. Friday's like our payday, because on the contract writing side, most of the expirations are on Fridays, right? Unless you're doing it on SPY or Triple Q or something. But Friday's like our payday. That's when all of our contracts are expiring, and we get to realize most of our money. Now that's outside of potentially taking profit early on a position. Like if I wrote a contract and it was for 4 weeks for expiration on the contract, and within 1 week, I get 75% of my max gain on the table. Well, it makes sense to go ahead and buy that to close it. You buy to close it early. It would make sense to do that, because why wait 3 whole more weeks for the other 25%? I mean, you're kind of beating the law of averages there. So those are the times that I take early profit on my contracts. Is, like I say, if it's a 4-week contract, you got 75% of the max gain. You can only make 25% more on it. And I got the bulk of the profit in 1 week. Why hold it 3 more weeks? You're exposing yourself to unnecessary risk. just based off of the calendar, right? The days on the calendar. So I'll go ahead and pocket that, and then sometimes I'll get a pullback on the stock after that, and I'm able to double dip on the same expiration. I love when that happens because now I'm making more money than I originally thought based on the contract that has 1 month of time on it. But let me know in the comments if y'all enjoy me rambling on about this kind of stuff. I just been trading for so long, and I've been with the Discord for a while, and you know, I'm kind of just now getting online in a free manner, you know, not really trying to sell anything. I just, you know, want to let everyone know all these creative ways that you can trade, and it's not just black and white and one size fits all. You know, every trade can be different. But I like showing people the different ways we can trade and kind of opening up their eyes that, you know, there's definitely more than one way to skin the cat. There's definitely, you know, if the type of trading that you're doing right now is not working, you know, just some words of encouragement. Don't give up. You know, you gotta deep dive into it, and you know, that's what I do in the Discord. I want to show people the different ways to trade, because there's a lot of different ways to trade. All right, and I just feel like, you know, it makes me feel good to be able to show people how to do this. And again, I'm not here to sell anything. So if you want to join the Discord and hang out, there's a link in the description. You can join the free section and just see how you like it. And if you do join, tag me in the chat. I go by TheSwingingBull. Right there, I'll put my name back up there underneath my picture. Tag me in the chat. I'll come by and say what's up. Maybe we can talk for a little bit, and there's something I can help you out with pretty quickly. Who knows? But yeah, that's really all the time I got for tonight. I hope everyone enjoyed the content. I'm also doing a $2,500 account challenge, which is very fun. So I'm about 2 months into that, and we're already double-digit gains on that account. So it's great. Also, if you want to follow me on X, I am starting to post some trade ideas on my X account, and my handle is swingingbull_1. So if you want to give me a follow there, I plan on posting some really good content on there for everyone, trade setups, and just some advice, and not financial advice, but like, you know, some education, if you will. Yeah, let's call it education. But yeah, no, I appreciate everyone. Good chatting, M Labs. Good chatting with Raphael and my buddy Futurix on YouTube. Always appreciate the engagement. It was really good seeing everybody. Over 800 people in the stream right now, but I hope you guys find the content educational and you like what you're getting out of me. And if you ever want me to go over something else or something different, just let me know in the comments on the next stream. I don't mind, you know, going through stuff that you guys want to know, and you want me to look up a stock and do a quick dive into their income statement and balance sheet and check the PE and EPS and debt to asset ratio, cash and equivalents. We can look at all of it together, you know, and I'll let you know what I think. We can come up with some trade ideas, what we think, you know. If we're bullish, you know, I come up with some spread trades and kind of offer that up for everybody. But I'm here for y'all. But yeah, other than that, Swinging Bull with PB Alerts. I hope everyone has a fantastic night. And until next time, I'll see you in the next stream. Cheers.